This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC Plus compliance with oil cuts fell slightly to 115% in September, sources said, indicating that as the alliance raises production targets, some members are still falling short as they face challenges in pumping more oil. The Organization of the Petroleum Exporting Countries and Allies led by Russia, or OPEC Plus as the alliance is known, raised its output targets by 400,000 barrels per day, BPD, in September. It has also agreed to raise them by a further 400,000 barrels of oil per day in October and in November. Underinvestment and maintenance problems have stymied efforts by Angola and Nigeria to raise output, an issue that is expected to continue impacting the West African producers in the near future.
China daily crude oil processing rate fell again in September, to the lowest since May 2020. As feedstock shortage and environmental inspection crippled operations at refineries and a power crunch dampened refined oil demand from downstream users. Throughput last month fell 2.6% from a year earlier to 56.07 million tons, or about 13.64 million barrels per day, BPD, National Bureau of Statistics, NBS, data showed on Monday. September throughput was also lower than 13.74 million barrels of oil per day in August, which was a 15-month low. China has been suffering from its worst power crunch in years, which cuts into demand for transportation fuels.
Moving on to the top news in the energy sector.
China's power shortages hit growth in the world's second biggest economy, threatening more pain for global supply chains, while Europe's gas squeeze looked set to continue as Russia's Gazprom showed no sign of hiking exports to the region in October. Coal, oil and gas prices have all rocketed higher in recent weeks, hammering utilities and consumers from Beijing to Brussels, raising inflationary pressures and putting at risk a global recovery from the COVID-19 pandemic. The red-hot market underscores the scale of the task facing world leaders, who are under pressure to map out plans to wean their economies off fossil fuels in preparation for COP26 summit climate talks that start on October 31.
India, grappling with its worst power crisis in 5 years, has asked Qatar to expedite delivery of 58 delayed liquefied natural gas, LNG, cargoes, two sources familiar with the matter said. Asia's third-largest economy is suffering its worst power shortage since March 2016 due to a crippling coal shortage amid high global energy prices. Infrastructure maintenance at supplier Qatargas prevented it from delivering 50 LNG cargoes to India this year, the sources said, prompting India's oil ministry last week to write a letter seeking delivery of those cargoes.
Next, we have the top news in metal markets.
China's aluminium output in September declined for a fifth consecutive month, official data showed on Monday, as ongoing electricity shortages in the country led to deeper cuts in industrial production. The world's top producer of the metal churned out 3.08 million tons of primary aluminium last month, the National Bureau of Statistics, NBS, said. That was down 2.4% from 3.155 million tons in August, and also down 2.1% year-on-year. China's September aluminium output was its lowest monthly level since June 2020, according to Reuters records of NBS data.
Weak Chinese and U.S. economic data on Monday stalled a rally in copper prices even as a supply squeeze forced traders to pay unprecedented premiums for quickly deliverable metal. With stocks of available copper in the London Metal Exchange, LME, system tumbling to the lowest levels in decades, the premium for cash metal over the 3-month contract rose above $1,100 a ton, almost double the previous record high set in 1987. Benchmark 3-month copper was down 0.7% at $10,213 a ton at 17:01 GMT, 1:31 p.m. Eastern Daylight Saving Time, having risen 10% last week. We will now look at the top news in the agricultural sector. Global vegetable oil prices, which have hit multi-year highs in recent months, are set to decline during the first half of 2022 due to a strong recovery in production and inventories, leading analyst Thomas Milkey forecast on Monday. The decline is likely to start in the next 2 weeks and gain momentum in 2022, led by sun oil, palm and soy oil, the head of Hamburg-based analyst firm Oil World said in an online seminar. Benchmark prices of crude palm oil, the world's cheapest and most widely used edible oil, have already skyrocketed 37% this year to record highs above 5,000 ringgit, $1,202.79, a ton as a labor shortage hammered output.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.